Today I'm going to do brief updates on several of the markets that I feature each Saturday in our YouTube and Twitter videos. I'm Robert Miner with Dynamic Traders Group, and this is our weekly trading video where I teach you some specific trade strategies on a current market position. It's a brief version of the much more extensive analysis and educational videos that we provide our DT Report subscribers. But even if you don't trade the markets we look at today, what you learn today you can apply to any market and any time frame, so pay attention. Learn to trade. Forget about forecasting. Learn to trade. If you find this video useful, like us and subscribe so you'll be notified each time we upload a new video, and let your friends know about it too. Share the good news. Okay, let's get started. Let's take a look at crude. I featured crude just last week, and more than likely, this March 7th high completed a five-wave major bull trend going all the way back to April 2020. Where are we at right now? It's just beautiful. This is textbook stuff. Five-wave decline. That should be a wave, what's in Elliott Wave terms, 1 or A. In either case, it's an impulsive decline. It should not complete a correction. We should have a corrective rally, and then once that wave 2 or B corrective rally is complete, then the crude should continue to decline to below this March low. So where are we at just for the next few days? More than likely this corrective rally will be complete by Wednesday the 23rd. Ideally it reaches around the 50 to 62% retracement, makes maybe a momentum, daily momentum bear reversal that completes the wave 2 or B correction, and then again continuation to a new low. By the way, more than likely crude is going to be in a multi-month corrective decline and will continue at least until, let's just say, we'll be conservative, probably at least into September of this year, sideways to down, and quite a ways further down to go, probably around $80 to $70, maybe even a little bit less. So that's what we're looking at for crude. But this coming week depends on what time frame trader you are and how you want to take advantage of this information, but probably a corrective high followed by a new low in the weeks ahead. So this is gold weekly data. The weekly momentums made do a look back bear reversal this past week. No surprise there with this significant down week. The week before, the top was made right within the ideal time frame for a weekly high. That's either the week ending March 4th or the 11th. Those are a couple of the time factors. There were more. The most important thing is more than likely a weekly high is complete. Here's the daily data, and on the daily data, this initial decline came real close to the 62% retracement last week. The daily momentums may do a look back bull reversal that usually indicates that a daily low is complete and the market will be sideways to up for several days until the momentum cycle gets overbought. However, because of the pattern position, I suspect we'll make a new low. Now, whether we do or not early next week, to keep in mind a weekly high is complete. Any rally should be corrections. Take a look at the 240-minute data. This is what I'm looking at coming down off the March highs, a possible 1, 2, 3, and then Thursday made a wave 4 high. Now, if that's the case, the ideal end of wave 5 target, not too far below the market, around 1886 down to 1866. So if gold continues lower early next week, that would be the probable limits on the downside before a 5-wave decline were complete. Again, we're not forecasting, we're identifying conditions based on the current position of a market, and if it continues lower, this would be where the wake-up call, where we'd want to be alert to a possible low. If by chance gold was just sideways up early next week, it doesn't change that a weekly high is complete and any advance is a correction within a bear trend. We just want to identify potential reversal points based on pattern. If it reaches that, we can develop a specific trade strategy. Before we continue with Bitcoin and the S&P, I just want to encourage you to go to dynamictraders.com when you're finished here. Join our DT Traders news where you get additional updates. We definitely have one every Wednesday, and then there's some additional updates and videos that we don't have on YouTube, of course. There's no cost to it. You just sign up. We're not going to hit you with a lot of spam. You'll be lucky to hear from us once a week if we have a new update or if we have some kind of special video. So it's a no-cost, easy way to get some more education and some more alerts on trades coming up. Okay, let's get back and check out Bitcoin and the S&P. This is a Bitcoin weekly data. The most important thing to keep in mind with the Bitcoin is that coming off this January low, this is more than likely a correction. It has all the characteristics of a correction. When it's complete, which ought to be pretty soon, Bitcoin should roll over to the downside to a new low. Now, where are we at immediately with Bitcoin is this past week, after Bitcoin's just essentially been sideways for 6 weeks, this past week as Bitcoin did make an 8 weekly momentum bull reversal. 13 is already bullish and not overbought. It does warn that Bitcoin is most likely to be sideways to up for another week or two. If that's the case, just be warned that the maximum upside, if Bitcoin continues sideways to up, the maximum upside is probably around 47.7 up to 51,000. That would complete a correction off of this January low. I'm not forecasting it's going to reach that. I'm just saying if Bitcoin happens to continue sideways up, that's probably the maximum on the upside before this correction is complete and Bitcoin rolls over to a new low. So probably not a lot on the upside, although that's a fair amount in percentage wise. This is the daily data, it's close only data. Again, clearly this is corrective. It's not impulsive. It's not part of a bull trend. It's part of some kind of correction. Keep in mind that as of Friday, the daily momentums are dual look back overbought. That means Bitcoin's within a day or two of completing what we call a daily high, and then should be from there sideways to down for at least 2 to 3 days. And boy, Bitcoin, it's a really great technical market to trade. Forget all this nonsense about how it's going to take over the financial system or it's a store of wealth. That's been shown to be nonsense. But here nor there, it's a great one to trade because it responds so beautifully technically. Here's the setup in the days ahead. If we get the next daily momentum cycle and bull reversal, and if Bitcoin remains above the March 13th low, that'll be a dual time frame momentum setup to continue that weekly bull trend, so to be sideways to up. Now, given the pattern and the lethargy of it over the last several weeks, it may not have much of an upside once you get that dual time frame bull reversal. So there's a possibility of breaking to a new high, but the point is we don't know where it's going to go. What we have control over is identifying when the market's in a position to make a reversal and a trend continuation and to identify those conditions in a trade strategy. We have no control over where it's going to go. We have a control over when and where we enter, how we identify trade opportunities. So I'm just saying in the days ahead, the next potential trade opportunity is the next cycle with the bull reversal and our DT oscillator as long as price has not closed below the March 13th low. That'll be a trade opportunity. Where it goes from there? Well, we'll find out. This is the S&P SPX, the cash data, weekly data, and boy, what an up week we had. We've been anticipating a weekly low for a couple, 3 weeks, and this past week, the weekly momentums made dual look back bull reversals from the oversold zone. So this is a fairly significant low. What this means is more than likely the SPX is going to be sideways to up for another 2 to 3 weeks. However, keep in mind, more than likely, this advances a correction within a higher time frame bear trend. We're not going to go over the reasons why for that. We went over those in detail in a 17-page report, DT Big Picture report on the stock indexes for our subscribers. So if you're interested in a little bit longer term, you might want to check out our DT reports. Here we are with the daily data, and again, 5-wave decline. This is actually one of 3 potential Elliott Wave positions. The thing is, all 3 of them indicate that the SPX is in a position to complete a weekly low as well as the other indexes. But here's what's significant now. Big up week this past week, of course. The daily momentums reached dual look back overbought on Friday. That means we're within a day or two of completing a daily high. So we're about to roll over and make a 3 to 4 day or so corrective decline. But when that's complete, then given that the weekly trend should be bullish. That should be a correction and then should continue sideways up for a couple more weeks. So that's going to be the setup in the days ahead on the long side, and it'll probably be at least middle to the end of next week when the daily momentum makes its next cycle and bull reversal. That'll be the dual time frame setup to be enter on the long side. More than likely, this corrective advance, if it's a correction, as I anticipate at least, will not be complete prior to the end of March. That's the earliest. And more than likely, it'll continue into mid-April. And that's the 62% time retracement. There's reasons for that. You know, if you want to subscribe, we can give you details. But for just basic information, corrective advance should continue until March and not be over, probably not be over until April. Okay, that's it for today. Hopefully these little updates helped you out. You understand a little bit of how we look at the markets. You got some ideas for trade opportunities this coming week. Check out our DT reports. Stay safe, stay healthy. Robert Miner, over and out for now.